Bad. My bad. SPX double top and new high. Triple top, really. Woo, man. And the pullback. China. Okay, now we've got a respectable pullback on the SPY on the 21. I got to get another one of these out here. Be nice for it to come down and do it head and shoulders down here. Yep, she went ahead and broke out. So we're at the resistance level on the SPY. Earlier I gave a little zone of resistance, and that's right here. Now you got a shoulder line right here at 498 something, so I'm getting ready to get a put. These are the 496 puts. Oh, I never need to get my coffee. I'll be right back. Oh, damn, that's a spy. Oh, yeah, cool. I almost got 136. Here's 133. That kind of looks bullish, but see what happens. Drop, baby. All right. 152. Now profit. Didn't take long to get back up there. $146. Come on, give me a drop. I mean, it's. I'm just looking at an expansion pattern. Come on. I gotta get a new mouse. God. What the fuck? What the heck? Why did it do that? Oh, get out, 156, but I want to know why it did that. That ain't what I got on here. God damn it. Jim. Make it stem hard. One, two, three. 1, 2, 3 going to the upside. So thing, man. I tell you what, I'm getting really upset with this mouse. Jimmy doesn't like to be delayed. 1, 2, 3. 1, 2, 3, 4. Can't go down no more unless we go down. If we break that support, we buy at the double bottom. 10, 4. Better we. I'm semi-bullish. I'm not bullish. We are in a channel. Today's channel, you can see it clear as day. 496.91 to 98. $2 spread. Stay in the SPY trade as long as it holds the trend line. Yes. Get calls ready just in case. And just got out of these. The 500 strike times 10. $500 strike calls. $108. You get double right shoulder. It's bearish for one. It's definitely bearish because it's lower highs. I did say double bottom, but okay. We got 108, and we hit 102, a buck. Now you got your right shoulder. Franchise, Yoko. Let's see if it holds here. $0.99. Got a buck. It says stop. Damn it. Mm-mm. Ah. Oh, man. Yeah, I got 104 average. $104. How did video get over here? I'll be right back. Oh, gross. This is gross. $86. Nah, I'm just gonna leave it alone. SPX almost to the 200. So is the SPY. I'll be right back. And the 5,000s are at 480. Like to see it come down and hit that 200. One more candle. Let's see if we get one more red candle. His PX started to round up off that 200 a little bit, but I didn't jump it. It was at 450. I don't got CNBC on today. I tried to watch it this morning and it just got way under my skin, so I just said I'm going to try to go without it today. If I watch anything, it'll be Schwab. I mean, it's all about politics this morning. Can't you just get over this and talk about stocks? I guess they took away the SAT test or something because they said they were racist. And then they brought them back because it was ruining. They were just putting kids in there that couldn't read and write in colleges. What's that message?
Much stronger, and this is a pretty much perfect chart. I know that they underwent their breakup about 3 weeks ago, but it hasn't really had that much of a massive impact on what has been a long-term trajectory of nice price activity. This is, of course, the 131-year-old company's now breakup deal, and what this means to their financials, I think, is hugely important, especially as we go into their report tomorrow morning. So it's interesting, like, as a standalone company, what will their reporting structure look like? I think there's still a lot of unknowns. There's actually not even a lot out there as far as estimates.
I'll tell you what G's going to do, baby. Pretty good run. I got 138.60 out here already. 936.
Picture, because I have to say that on a year-to-date basis, this name actually looks incredible. All things considered, I'm just used to it. I mean, little 2023 that was GM's story was so disappointing.
Right, it's like swapped with Tesla, you know, as like the momentum tech trade, or auto trade rather.
So true, except for I will say, I was going to mention that as far as its valuation is concerned, very, very, very different valuation than Tesla, as this name still actually looks pretty attractive.
SPX.
Trades that are forward sales multiple of just around 0.3 times roughly. That's below its median of around 0.35 times over the last 5 years, and actually is a slight discount to Ford. So you could still make the argument both Ford and GM are dirt cheap compared to the industry, while GM is slightly more attractive at the moment just based on its price to earnings ratio and price to sales.
That one candle brought this thing down to 510.
Brands, its flagship brands like Chevrolet, Cadillac, Buick, and GMC have continued to increase at a pretty healthy clip. However, as far as earnings go for this quarter,
so here, the SPX came down and had a hammer, and then I was watching it here, and it came down real fast, like a boom real fast, and I jumped in it at 510. So I've seen these higher highs.
historically, any surprises? We do know the impact of the strike. We do know at least the expected losses are incurring at their cruise unit, which is their autonomous unit. So we at least know, I think, a pretty good picture as we go into this report.
Yeah, that's a good point. That's really what's been behind it. It's actually a lot of good news, or relatively good news, compared to the autos as a whole.
No major price restructurings, no major recalls. I mean, all this, avoid the headlines right now as far as like all
back to
things
510 here.
Automobiles, and it seems like you're in a good place.
God,
yeah, and
that sucks.
The kind of hybrid ICE, fleet has been more rewarding in this market the last 6 months. Rick,
back to 510, and then back to 570.
We got going on here.
Well, once again, a strong move to the upside that topped out in the yearly highs, and now we're faltering a bit here. We are in this situation here, unlike our previous chart, we have crossed below our 21-day EMA. But backtrack a little bit. Look at this.
Don't be
big
charting
red
GM
candle
for
here.
them
We had
people.
a major bearish engulfing
620.
candle. The distance from the open to the close of the red candle completely encompassed the previous day's distance from the open to close. The real body is what it's called. So this is a bearish candle pattern. It did indeed, send us lower here below our key supportive level of the 21-day EMA. Now, it seems like things could be, improving a little bit here. We're a hair above oh, no, we were a hair above it. Now we're back below that 21-day EMA. Look for price to push above that level. That's a resistance point to be watching right now. The slope of the 21-day EMA, the trajectory here, is also just flat right now here. So any further decline, pushing that trajectory to the downside, the angle of the line that we're drawing here with our moving average, that would be a further sign of potential decline. RSI is also getting a bit of a lift here because we're breaking above this trend line and we're also breaking above the 50 midline. Now you can see when we look at price, we're getting a matching break above a shorter term trend line here. So this one is actually, perhaps the setup wasn't looking as great on Friday, but it's improving notably today here. Potentially a breakout to the upside could be happening and retaking some of the ground that we've lost after falling from those highs.
All right. At least every time it's looked like it's going to break, it's bounced back up. So it's had a good record of reclaiming lost ground pretty quickly, since these last two earnings. So we'll see if the next one here can keep up the momentum. Definitely an important earnings, given the last two were pretty good upside catalysts for General Motors. Last one, Spotify. A lot going on in the music world. They're changing prices. Market has rewarded them for it. It's really been this great comeback story, finally. Or maybe, I don't know if it's come back. It's like come to fruition, realization moment of how much dominance they have in streaming.
Oh yeah, I mean, pricing power is something that everyone seemed to notice after their most recent round of price increases that they announced, which are going into effect actually in the U.S. later this year. But we saw initially they will be raising prices for their premium subscription service in several markets overseas. As much as 8% after that news, and all these analysts came in and updated their coverage and were like, the pricing power and Spotify's dominance. It's like, hello, that has been the case for like the better part of the last decade, honestly. I mean, I can't think of a more disruptive but beneficial tool to the music world. I mean, we used to pay $1.29 and then not 99 cents for songs. That was ridiculous. Spotify is like the greatest cost saver of all time. But as we go into now this earnings, I think a lot of this expectation has been priced in. Shares have pulled back. Again, as of late with the overall market, but we are expecting overall
Spotify got earnings coming out.
Also expecting to help benefit its top line growth. Now, but the bottom line is right now expected to improve, coming around 66 cents per share. That would be quite a significant improvement from the losses it reported last year. So there is a lot to be excited about, especially as far as its margin performance with these price increases, like what that looks like now for its overall profitability. Because consistency, like you said, is something that's lacking from Spotify. I'm not sure how this name is able to
She's a trippy looking chick.
Volatile, but it is.
Well, I feel like it's kind of where Netflix was maybe like a couple years ago, as they were making some changes to pricing and the crackdown and all that, a way to really prioritize margins and money making for this business. The unwind, though, is kind of real here, Rick, after that gap up on the pricing news.
Yeah, once again, similar read. Big run up, 52-week highs, but this one I think is the worst short-term setup.
We got 1, 2, 3 on the bottom now.
Shorter-term trend line
on the SPX
right here that we broke through. We broke through our 21-day EMA. The 21-day EMA is trending downward now. We filled this gap that formed right here when we had that gap up between about 271 to 278. Now we're moving below those pre-gap high point, that pre-gap high point that we established there. So we can also see momentum has fallen off precipitously here. We're below that 50 midline now, following along with this trend line, which is actually a little bit steeper than price looks here. So not a great situation for the bulls. If we do keep moving lower, check out the 63-day EMA in confluence with our blue trend line there. If we were to move to the upside, look for this gap to be filled and for us to reclaim those old lows near about 288, 289.
So that gives us a good place to look for. If you've been hanging on in Spotify, hopefully 260-ish holds for you, 258-ish. We've got that volume note as well. So, all right, a little give back for sure. A bit disconcerting that we're below the level at which they announced that major structural pricing change. But, all right, earnings, maybe we can put a bid in around 260. Thanks, Rick Ducat and Jenny Horn, getting us ready for earnings this week. Let's talk another mover here this morning on some changes, particularly layoffs, as Lulu shares are actually up right now. Apparently the market wanted them to tighten up ship a little bit.
I remember when I first started flying and we would experience turbulence, I would
put my arms around Jim to hold on to me tight when turbulence got a little out of hand. And one day my hand slipped down on his chest and I pulled his chest hairs and he screamed real loud. And all of a sudden, all the stewardess started coming up and, "What's wrong? What's the matter?" And I said, "My girl's over here pinching my titties, man. This turbulence." Woo! The apple's in the green now. Well, it was. I thought it was in the red earlier. Guess not. TSM's even Steven. Oh, I better watch my little option here. Back to even on it. Yeah, this ain't appreciating, it's depreciating in price. Goes that much more, I'll be in the hole. Someone knocking at the door. Someone ringing a bell. Open the door. Hillary is pulling back. Tilray. I'm in the SPX. We're at 480. Double bottom here on the SPY. we can hit the 200 on the third time here. Should have sold that for profit, but I didn't. Yeah, right to the 200. One, two, and a from. There we go. Get ready. It's all or nothing right here. Wubbits. Tubus. And a freebie. $3.80, 510 and $3.80. That's it for me. SPY pulling back some more. I got 3 contracts of the 5,000 strike at 413. On a 1, 2, 3 setup. I was really impressed with Ryan Garcia this weekend. He even had me fooled. I understand what he did now. I guess Haney was hanging out with Diddy. And so Ryan been hinting around human trafficking, and I guess he was messing with Haney's mind. I didn't think about that until now. Now I saw pictures of Haney and Diddy together. Come on, man, you're losing. That's one of the best fight promotions I've ever seen. Besides Ali. I'm going to write a song about Diddy's place. We're on the 200. I'm hoping for a bounce up on this. If we fail this 200, I got to buy puts. We're going to see here. Do you see the 200 there, guys? Damn. Da, 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 da. Come on, you dog. Man, it ain't working too well. Come on now. I don't like the fact that we're under that 200. Trump fan club. Welcome to the room. Come on. Well, I don't think I'm going to get it. You suckers. We're pushing it right down to the final. Damn it. Not been an easy day. Well, it has until now. The market pulled too much forward outlook into current price action, says Citi. The market pulled too much of a forward outlook into current price action. Duh. Why are they coming out saying all this stuff now? That was real obvious back then when we were... The market pulled too much of a forward outlook into current price action. It was obvious. I mean, it was really obvious. I might have to take a loss. Come on, man. Get back up there. Break it. Break the 200. Man, I can't believe I'm down on this thing. Come on, baby. I love you. Bah. Shit. Fuck. Where did I see that coming? Wow, they actually got a good looking chart up here. They must have done something different.
A stock that will provide inflation protection and also provide global growth to a portfolio. That's why I'm in it, and I like having the defined risk with the options trade.
All right, next up, Taiwan Semi. We just had on our last guest who still says, you know, semis have room to run, and the group sort of pulled back a little bit. Your thoughts on Taiwan Semi in particular, Joe?
Yeah, when I was talking about these higher interest rates creating a risk-off trade, you can look no further than the semiconductor index. Last week, we know what happened to NVIDIA. Supermicro had big sell-offs. Taiwan Semi maybe started that with their weaker demand forecast on their report. But I think, yeah, maybe they had come too far. And there's two ways to correct for prices, or for stock prices. There's price and time. We got a price correction last week. I'm looking for a time correction to happen next. You know, this is not uncommon. Seasonality for semiconductors, they're weak in April and May. In an election year, usually you see in April and in May a consolidation period. So I think that's what I'll be playing for. I'll be looking for consolidation through May. Volatility still sky high after this earnings event. So to play that and to play to the upside, I'm going to be looking at selling a put in Taiwan Semiconductor. Happy to buy it if it goes lower, but I think the base case is for a sideways trade for about a month and a half here.
Yeah, understood. Okay. And to your point, right, we've seen the group selling off. There were concerns, and that's how we saw that trade was a good one for a long time. When rates went up, it was risk off. And then it sort of got a little cloudy. Ben?
Nicole, Joel mentioned some of the selling we've seen over the last week. It's actually been a couple weeks now that we've been coming under pressure. Shares of TSM recently topping out, we'll call it right around that 148, 150 level, actually, to be exact, 148.43. That was about 2 weeks ago, and you can see some of the price decay that's ensued since. Earnings didn't really provide much relief, a little bit of a lift back to 145, but look at the selling into the end of last week, a reflection of what we saw in terms of the NASDAQ. Big names like NVIDIA sold off double digits percentage-wise. Pretty well-defined trend lower. Again, we're going from 148 recently to begin the week down around 125. So a significant move lower here, but a similar pattern in terms of what we talked with FCX. You've got short-term weakness, but long-term strength. Migration value to the upside. Well-defined areas to keep an eye on as we retrace and pull back a bit here. I kind of took out a fat crayon, just establish a bit of a balance around this 140 level, up from the prior area balance that formed around 90. If you look into the bottom left corner of your screen, this chart goes all the way back to the end of 2022. So you can see again, we have been and continue to be trending higher. Yeah, topping out at 158, and this move lower here again back to 127. Not necessarily what the bulls wanted to see, but sustainability comes into question when you see a big move up like this. So it is healthy to actually consolidate and form a bit of a more horizontal, overlapping, rotational type pattern up here. Basically, it's value being formed at a higher level after a breakout out of that range that we had been in forming around $90. So this is exactly what the bulls wanted to see in some ways. Again, the pullback, tough to stomach a bit, especially if you were buying in near the highs. But if you've been in this long term, I mean, this is, again, a win for you in many ways. Taking a look at RSI, a reflection of some of the weakness we've seen as price activity has come off, so has RSI. Just recently back down below the 50-day moving average, much like we've seen in terms of the broader market, still holding above the 200, which is well below, down around 107. Yeah, I mean, again, a bit of a pullback, but this could be a long-term buying opportunity here as well.
Yeah, and I'm sure you're watching the 50-day moving average too, as you're waiting for this consolidation, Joe. Final thoughts on your trade?
Yeah, I'm also watching that 200-day, you know, like I mentioned, there's two ways to correct price and time. We've come down in price. If we just trade sideways for another 2 months, that 200-day is going to rise up and maybe touch it. So that's what I'm looking for there. And yeah, I would love to see this for the bull case to keep it above 120 here. Just looking at, I'm actually looking at the 125 put for 320 in May. Just want to keep my powder dry for May. If we go below there, I'd be happy to dry it, or else I can collect my 320.
All right, next up, last but not least, of course, we'll be getting some earnings from Alphabet Google this week. So this is ahead of earnings, and I'm curious to hear how you would go about this play. But your thoughts on the company, the stock here at 154 today?
You know, I think it's held up really well compared to a lot of the other tech names. It's kind of right in the middle of this Mag 7 trade. You know, it's not really Nvidia, it's not really Apple on the bottom end. So it's doing well for itself, and it got a lot of heat at the start of the AI race. OpenAI came first. Microsoft took the big lead in the LLM, and the Bard launch just seems so disastrous for Google, but I think they've really righted the ship since then. They have a big deal with Apple. They're going to be their AI partner with Apple, so that they're going to be on all iPhones with their LLM. And I think that's kind of what Google wants to be known as. They want to take that lead. If they're on Apple, they're going to have the lead in the LLM. You remember when Google was just starting out, Yahoo was the biggest company on the internet, and Google became Yahoo's search, and people trusted Google from then on as the best search going forward. So I think this is kind of a similar game plan for them. They're on Apple phones. They're going to be known as the best AI chatbot. That's what their goal is anyways. And I think there's so many other applications for Google with AI that they can just take advantage of and just really at the start for them. And I think they're finally jumping in with 2 feet into the water here. So I'm excited about this earnings event. I'm looking to play to the upside. And I think a lot of investors looking at their chart price compared to a lot of the other risky names are doing the same.
All right, taking us down memory lane there as well. I like that. Ben, your thoughts on the technicals here today?
Yeah, Joe started off talking about how Google's hung in there pretty well. I would have to agree with that statement. When we look at the bigger picture, you're going to see this is a kind of a mix of the 2 names we've looked at so far, and definitely a standout player here. Let's just begin. First and foremost, short-term weakness, a similar pattern playing out in terms of the other 2 stocks we looked at. We're talking about a price decay last week, 160 down to 155. We're kind of holding this level here right now. You've got a pretty well-defined lower extreme. Friday's lows were on 152, 153.
Break it.
Extreme were on 157.50. But this is very short-term, right? Let's just step back because broader market sold off here, so I'm not surprised to see Google coming under pressure as well. But relative to the broader market, as Joe pointed out, this one's hanging in there. 107, 116. You can see some of the areas of consolidation that formed on the way up. This chart's going all the way back to May of last year. It's 4-hour candle chart, so we're basically looking at the last year worth of price activity. Here you can see it is hanging in there pretty well, right around 155, and you kind of got a line in the sand around 145, we'll call it. So very well-defined trend up, no rejection of the upper level. In fact, hasn't even really started to roll over at this point, just consolidating, just establishing value at this new upper level. Let's check where we are relative to the 50, the 200, because again, with the broader market below the 50-day moving average, this is a prime example.
Yeah. Work it.
RSI diverged, right? And so eventually we did come off here.
Ooh.
anticipation of the upside was somewhat limited at that recent run-up. But yeah, I don't think... that this is necessarily a sell signal. Does that make? I think that this could consolidate up here possibly, and I would have to agree with the bullish pattern or the bullish position Joe's taking here, because we're seeing a bullish pattern play out still.
All right. Thank you for all of that. It's interesting to see that divergence too, because something's got to give, right? When the RSI is going the opposite way. Final thoughts, Joe Tagay.
Yeah, just a very quick earnings trade for me. It's a name I want to own for the long haul, but just on this earnings, just looking at the 155, 160 weekly call spread, I can get into that for 220. Hopefully, that's $5 after Friday, and I think it's kind of like a 50-50 bet. I think it's going to be up above 160 on a good earnings. So I think that better than 2-to-1 risk reward is really nice for me.
All right, great stuff for the big three today. Thank you both, Joe Tagay and Ben Lichtenstein. Appreciate it, right? We had Freeport Mac-Ran, Taiwan Semi, and of course, Alphabet ahead of those earnings this week. Thank you. Coming up next, we will spotlight Spotify. So if you listen to Taylor Swift's new album, like the millions of other people who have, let's see if we can get some details and preview the
I don't think I've ever listened to her song.
Be right back.
Tell you the truth. I don't think I've ever listened to one of her songs. I mean, I'm not in... I mean, I have to congratulate her. I mean, she's done a very good job marketing and showing off her ass. That's about it. If I had a nice bet like that, I'd probably make millions. I'm about ready to have lunch. I'm still in this call. I mean, I about sold it, but I'm holding on to it a little longer. We broke out of the falling wedge. Now, was a little bit above even. Had to work my way out of this trade. I've got internet issues today. That's all I need. Good morning, mannequin. Did you watch the weekend watch list video? Was I Premier recalled? Does it sound pretty close? Break it. Amazon had a little correction. Snake breakout pullback. What is a falling wedge? We're now at 380. I am up. SPX, baby. SPY hit the VWAP. SPY hit the VWAP. Huh. Brian bid on himself, won $12 million. He won $50 million fighting that idiot. I'd have fought him. I'd have fought Haney in my prime. Not now. I'd have been in his, well, yeah, I'd been in his weight class. Not too many in here today. I'll be right back. I'm gonna go get something to eat.
As well, Albertson's CEO did talk about a difficult
industry backdrop, and looking ahead warns that they'll continue to face some of these headwinds, especially in the first half of 2024, most notably higher labor costs, lower government aid to its customers, reduced COVID-related income, and then the shift towards pharmacy and digital businesses, which are lower margin. Albertsons CEO said, "We expect these headwinds to be much stronger in the first half of 2024. We also did get an update on that nearly $25 billion proposed merger with Kroger that was announced back in October of 2022. The FTC, of course, had sued to block the deal about concerns of reduced competition and in turn higher prices. So Albertsons and Kroger said they're expanding their divestiture plan in an attempt to alleviate some of those regulatory concerns. They're going to sell 166 more stores to privately held C&S wholesale grocers to gain antitrust approval. That's in addition to the 413 locations they agreed to sell back in September. We'll see if that helps to move the needle at all. But Albertsons shares, as I said, under pressure today, down about 0.6%. Kroger actually was higher until just a few seconds ago. It's basically flat right now, just barely below the unchanged line. That being said, it's up 23% year to date. So different stories for Kroger than Albertsons,
I'll be right back.
At least in the first quarter plus.
Boy, it's taking forever to do a deal to meet that regulatory environment. Caroline,
That thing might fly now, damn it.
At Albertsons and Kroger's. All right, now time for the disruptors. And George Sillis is with us. We've already heard Tesla cutting prices, and now Li Auto is joining the game here because the competitive space for EV.
I want to make this clear. Wall Street hates it when people cut prices. But I hate it when they accelerate prices to the extreme. If I was, let's say I'm Elon Musk. I am Elon Musk. I want to make the EV car affordable to everybody, not just to the elitist. I don't care how much margin there is. I want to make sure that everybody gets an EV car. Yeah, I'm not going to rip you off like these other companies do. I'm going to sell it to you a little bit above cost. I want you in an EV car. I don't want to try to rob you blind like some of these other car companies do. I want to bring it back to a 40% margin profit. Everybody is having to borrow money to keep in business because they're charging way too much for these cars. But I want to make it affordable. I can afford it. I'm the richest man in the world. Money's nothing to me. I just want to make sure that you can get into an EV car at a decent price and not try to rip your asses off. Now take that, Wall Street. Haven't you even heard him say that before? And you just keep harping on it.
Their net income last year was about $1.6 billion. So again, their profit margins are.
He doesn't care about profit.
Range.
You get it.
They do have a lot of cash, around $14.5 billion on a.
He's not like you people on Wall Street.
Can afford to actually cut prices because, just to give you some comparisons, Tesla's net income margin is around 14%. Lee's is around 7%. If Tesla's cutting prices, let's say 5 or 10%, that is not necessarily going to impact their net income as much as a company like Lee, which is not selling effectively as many units. Last year, they sold 100.
Again, Tesla's selling all these millions of cars. These other car companies are selling 1 or 2 at a time, you know. And I had a picture frame business. The guy down the street was selling the same frame that I had for 5 times the markup. I was selling it for 3. Who do you think? The same beautiful frame from the same company and everything. Who do you think got sold more frames and made a bigger profit? I did, because I was selling 5 or 6 of them a day. He was lucky to sell 1 a week. but I didn't make it to where it was outrageous. You know, I made it affordable so I could put that frame into people's houses. And people would say, wow, what a nice frame. Where'd you get that at? Picture Frames Plus. You wouldn't believe what I paid for it. The guy down the street wanted $500. Jim gave it to me for $250. Then the next day, that same customer comes in, brings her friend in, and buys 2 more frames. I mean, well, sometimes I wonder about Wall Street, if you even know how to do business. And this SPX is at 430 now, baby. Scaled out. I still got some of these left.
When you look at the competition and you think about AT&T and T-Mobile, where do they stack up in your mind as far as success? How do you define success?
Well, I think the first thing we have to recognize is we're not selling a luxury item anymore. This used to be years ago a luxury item. You had a cell phone, you have the services. We're selling a utility, and that's what these companies are selling. And that should be pretty easy because we all relied upon that. Even earlier today, the Verizon CEO, Hans Vestberg, much stated that. So it should be easy for them to sell the service. I think the competition with AT&T and T-Mobile, if you're just asking me if it's a horse race, I always see T-Mobile as out in front. I think they're farther ahead with a lot of their scope of their services, et cetera. I think AT&T and Verizon are kind of that second and third horse. They're kind of trying to compete for whatever's left. And I think the problem is they've got so much into promotions They forgot to look at the basics and see what they're providing the customer. And that's where customers are, again, getting repackaged services, but they're not actually getting the benefits, such things like 5G, which right now, in my opinion, has been a lot of money put into it and not much result from the customer side of it.
Right, understood. Jeff, same. What do you think? How would you decide which one's doing better than the other? How do they stack up?
Well, you have to look at it going backwards, or you're looking at it going forwards. Looking at it going backwards is what we're talking about right now. But if you look forward, it's a completely different marketplace. We're going to be valuing these companies differently.
I'll be right back.
That we use these phones differently today than we
I was very
did
impressed
10,
with
20,
this.
30 years ago.
I mean, I was worried.
The iPhone and the Android 20 years ago.
This trade here, I was down $400. I'm going, God, man, do I want to buy? Do I want to go ahead and throw another 4 contracts in here? Do I want to or not? And I sat there and looked at it. And I said, damn it, I'm going to do it. It's a falling wedge. If it doesn't squeeze here any moment, I'll get out of it. And then we broke out, and I felt, oh. So, I mean, that was nice to be down 400 and then finish it off like that. I'm gonna go get my lunch. I'm not feeling too good today. Got the shakes.
The marketplace will be very, very different. Same as it was for T-Mobile. 10 years ago, T-Mobile was lost in space. They were not one of the players. But today they're a leader. So that can happen to any company. Any company can go from a leader to a follower or back to a leader again in the course of just a few short years. So we don't know for sure what's going to happen, what the world will look like in 5 years, in 10 years. But it will be very different from what it is today.
Right, and look, Hugh, you noted too about the bundles and what that's helping to keep Verizon in the position it's in, bundles with Netflix, Max, Disney, and the stock's at $38. Where do you think this stock is headed? And we didn't even get time to talk about the hack on AT&T, compromised information. We're out of time, but do you see these stocks going higher? Which one would be your pick here?
I think if anybody, I look at T-Mobile, and I think the thing they have no one else is looking at and is supported is agility, available to move with the market. That is the component that, like was being stated earlier, that you need. You need to be able to have agility. AT&T and Verizon are old players. They're playing the old game by the old rules, and T-Mobile is playing a new game by the new rules.
All right, Hugh Odom and Jeff Kagan, thank you both very much. Good to see you. Thank you, friends, for being with me right here on Trading 360. I'm Nicole Penelides. Make sure you download that free Schwab Network app. It's available in the Apple App Store 24/7, schwabnetwork.com. I'll see you at 2 o'clock. Keep it right here.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network,
daily live exclusive content tailored to today's investors.
broadcasting 24/7 from our studios in Chicago
And from the heart of Wall Street at the New York Stock Exchange.
up-to-the-minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services.
Available anytime, anywhere.
On any device for free.
Schwab Network, empowering every investor and trader.
Every market day. It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Schwab Network.
Boom, boom. Randy, 3570. Randy, dadgummit. $6. Jesus, piddly shit. God, it just tears me up. That's $800. Shit. Randy. I know what a fallen wedge is. Do you? I was looking at property this morning. I found a house. You want to look at it? It's only $5 million. Look at that one now. I sent this one to my girl here. I told her, I said, this is what I said to her. I said, baby, I said, I know where we can go in the world and day trade stocks and not get taxed. And she says, where's that at? And I say, it's in the United States. And no. And I said, yeah, move to Puerto Rico and you won't get taxed on your capital gains on day trading. You gotta live there 6 months. Nice little place. It's got a pool for me. like this one here. Kind of Victorian, ranchy. Golly.
When you look at how we closed out Friday, you didn't necessarily have a huge spike in volatility. Gold started to watch its own volatility come down. It wasn't really spiking to the upside. Crude oil, same, wasn't really spiking to the upside. Volatility was coming out. And the treasury market was heavy all day long. To me, that told me that you had a situation where, absent some sort of setback, some sort of geopolitical news, we were ripe for a bounce. Now, I don't know that this bounce will even make it to the end of the day. It's been tested several times already, but the conditions were met for oversold. The conditions were met on a near-term basis for a little bit of upside in equity markets. Now, where it goes to, how long before another failed rally, if there is one, that's anybody's guess, right? There's plenty of places to look at on a technical basis, but I'm not surprised to see volatility very heavy today and the market a little bit higher.
Yeah, the S&P 500 and NASDAQ 100 near that 30 level.
Well, you know what, Guy?
Technical base.
It's not hard to say. After one of the biggest weeks we've had in a sell-off, that we were going to come in here no matter what on Monday and be able to make some of that back up. So don't act like a hot shot.
The last month and a half, where hey, this pullback, it's probably healthier if you think we're going to go higher.
Yeah, right ahead of the Fed
Duh.
time period, Jerome Powell kind of joined the group and became a little hawkish. So he was the kind.
I like to listen to these people when they talk, because I can tell. I mean, I've been here every day. They have too, probably. But I can tell when they're pumping something, and that it is what it is attitude. I mean, to not think any kind of pullback is natural after what we've been through the past 6 months. And I don't even think it's enough. They might carry on like it is. They only want 6 to 8, 9, 10% correction. 6, 7, 8. I mean, that's just standard. But you heard the way I really got off on these guys last week. I mean, I figure I can't listen to CNBC much without getting off my I don't know, my run, because I'll just sit here and argue with them all day long, and I don't want to waste my time doing that.
Hey, the economy's still
But
humming along.
it helps
even
me.
with rates at these.
I mean, it fine-tunes me.
A critical piece to the situation, right? We talked about the jobs data last time, sort of narrowing the Fed's focus. They had talked
One
about
sandwich helped out a
balance
little
between
bit.
jobs, growth, and then the other side being price pressures. Well, with the jobs market being stronger than expected, continually a little bit more stubborn in their mind, it kind of shifts their focus to, hey, it's hard to make that argument that the risks are balanced. It's more focused on pricing. GDP has the ability to do the same thing. If it disappoints to the downside, maybe it brings those discussions back. But any hot print on GDP, in the interim, you could see how.
So I'm hearing that earnings won't be as good this time as they were last time either, because everybody went and spent all that money on AI.
On the earnings side, Kev, you mentioned Tesla earlier. This stock's down another 3.5% today, hitting 15-month lows in today's session. Nothing's going right. We talk about this headlines that come out on a daily basis. There's been nothing good coming out of, well, Apple also, but Tesla mostly.
There's a couple stocks. Boeing is suffering from that same problem. where the headlines is just the drip, drip, drip of negative headlines, and more from Tesla today. And they turn though, right? And they don't ring a bell on the lows. And you have to be careful here because Tesla has sold off a significant amount. And what does that mean? So much negative is lining up on Tesla. And if you watch this show a lot, we've said this. One little thing, one little positive note can turn this name. And meanwhile, when you've got Meta in these stocks that have rallied so much, one negative thing can turn these, you know, and Meta's got nothing but good news going on in it right now, just like it had nothing but bad news before. And so the flow of news and information and headlines is so important to how these stocks trade. But you need a tone change in Tesla.
Yeah.
And there's only one person that can set the tone change in Tesla.
Yeah.
That's Elon Musk.
And it might be guidance. They might miss on their EPS and revenue numbers. If
Or a
they
new
come out with
product.
something.
Or more details on robo-taxi. They've got to come up with something.
You guys are highlighting something really important, though. I think it was Piper Sandler talked about this setting up the Netflix earnings last week. It was a couple quarters ago, continually better than expected, better than feared. There was still recession fears lingering. It shifted going into this quarter of how big is the beat going to be. It was massive, and it's still not enough. Tesla is the situation that's a little bit of an outlier. There's no one saying this is going to be a good earnings. They have nothing positive to say. It changes the expectations tremendously. You could be in a situation where you had a ton of selling, and perhaps even just it's over buying of the news is even potentially just those who are betting against it cover on that news.
Yeah.
Or you can just trade her off.
Let's throw that one out because it seems like the move's already built into the.
But you can't get your money right.
Which other name, Kev, are you focused on?
You can't get your money out until you're, what, 59.5? Without being penalized? Randy, I say sell your wife, sell your house, and move to Puerto Rico with me.
Firm in the stock has not been up since.
Right, and you've seen that divergence between FedEx, which is doing better than UPS.
And let's face it, Amazon is now delivering more than UPS. They passed FedEx in 2019. They passed UPS last year.
Yep. Alex, we've also got Microsoft. That should be doing well. I mean, maybe we'll get some clarity on their
710.
AI side of their business.
Woo!
But that stock's also pulled back so far this month, too. We're down about 5.3%.
Nailed it.
Broken below its 50-day moving average, right at its 100-day moving average. So there are some names that have actually pulled back a little bit, maybe giving investors an opportunity.
Yeah, Thursday is going to be probably the most interesting of the days and has the most impact because you get Alphabet, Microsoft, and Intel. Those three can kind of create a three-headed monster if they move in the same direction. So much market cap being swung around there when you think about those companies. And I get it. Intel's a lot smaller. Big company. It's just not in that same camp. But
Here we
we're
go.
in a situation where all three of those come in sort of different spots.
Sing a song, sing out loud, sing out strong, sing of a double top right now, breaking out of a fallen wedge with a 1, 2, 3 and a 1, 2, 3, double top, baby, double top, double top. Winnie the Pooh, Winnie the Pooh. When I was young, I want everybody to look at this real close. Now, I've never shown this, so I probably have. But I used to be a model for Winnie the Pooh. Oh, man. We broke a new high. Jack Frost nipping at your nose.
Say in terms of where they stand with those longer term growth prospects. But, you know, even though the bar is low, this earnings season, we haven't seen, I mean, obviously some of the companies, the bar has been very high, like a Netflix, like some of the big tech companies that we'll be hearing from this week. But a low bar doesn't necessarily indicate that a beat will mean gains. So it'll be interesting to see what happens with UPS. But as I said, there is some optimism today. Shares up about 1%.
Caroline, I think you touched very early in your presentation. I think what's key for them, they've got to have one of those year of efficiencies where they get more automated, get more lean, cut expenses, work on healthcare deliveries and e-commerce returns, things that they got to figure out, things that Amazon doesn't do, and do those, because you know, like I was telling Tom in the opening segment, Amazon overtook FedEx in 2019. They overtook UPS last year in terms of deliveries. So you're not going to beat them there. So don't play there. Go somewhere else where the margins are higher and you can get your own niche, because like you said, with their headcount and the cyclicality of this business, they've got some issues out there. But if they come out with the right message going forward, this could still be a positive earnings event.
Yeah, you're talking about that Pitney Bowes report where they noted that Amazon surpassed UPS and FedEx in total deliveries last year. It is important to note, though, that UPS still generates the most revenue per package it delivers. So, you know, I think that's kind of a testament to the prices. When you go to UPS, it's never cheap to actually ship something, which is why you only see me in there if I already have a prepaid return label. It's the only way I ship something at UPS. But, you know, it is interesting because UPS, of the three, it's hard to compare apples to apples of UPS within Amazon when it comes to stock price and when it comes to analyst coverage, because Amazon obviously does so much more. But when you compare it to a FedEx, UPS is significantly underperformed. FedEx is up about 6% year to date, up about 16% over the past 1 year, versus, as I said, UPS down about 8%, down more than 20% over the past 1 year.
That's a nice reversal on Tesla.
Take a look at the
Called both of them.
They're still more bullish
Called the
when it
top,
comes to FedEx.
the
So while
pullback,
70% of
and the
analysts
boom.
still have a buy rating on FedEx, only about 40% have a buy rating on UPS. The median price target indicates about 10% upside from here. And for the median price target for FedEx represents about a 20% upside from current levels. So I think that's important to note heading into this report. But again, that could mean the bar is low and it could be positioned to gain. We'll just have to wait and see.
Yeah, price target hikes that they do annually, and then also the small to medium business market segment they're trying to expand in. All right, great stuff. Thanks to Caroline Woods, senior markets correspondent here, breaking down UPS for us. Alex, wanted to bring you in on the conversation because if you look at it, we keep on talking about the bars low on this, but they've got a lot to work through. But at the same time, as Kevin mentioned, if they come out with any commentary about, hey,
nice reject on the double top on the SPY, yes.
Targets on free cash flow, you know, this could turn this stock around.
Look at that, right to my resistance level.
The severe weather at the beginning of the year, too, is sort of a...
Does anybody remember the resistance that Uncle Jimmy called this morning? Randy? Magnificent, if you were here, you would give me a grade. Where in the hell are you? I want to point something out here. You ready? Who's ready? Everybody ready? Okay, this morning I'm gonna explain something to you, everybody here, real fast. It's gonna be a real good lesson, and it's really gonna help you learn how to trade if you're not making it yet. If you can't figure it out, I'm gonna give you a simple, easy trading strategy to follow every morning. I want you to look at the chart that I just put in the room. I want you to see the pre-market channel and after-hour channel with the two yellow lines. And I'll show it here in people on YouTube. Well, I can't see it. I don't know why it ain't coming up bigger. Well, these are the pre-market, after hours and pre-market channel. So I want you to take and draw a line to the highest part of that channel. Let's get over here and do this right. It's not going to make you a winner every day, but it will help you get established. And it could give you an easy trade every day. So you take after hours low or pre-market low and draw a trend line on it. And then take and do the same thing with the high, after hours pre-market high. So the first thing we did, I come in here and I scalped it right out of the bank. Right, first thing I did was scalped it. Because we were at that resistance level. So I figured we were going to pull back. And we did. So I jumped in it and I scalped it real fast. From here to here. Just like boom, boom. Got out of the trade. That's that resistance right here that I pointed out this morning. Pre-market high. Look what happened. So we went straight from the pre-market low, or at least right here, where we had that pullback, little pivot point area, and we found resistance right up there, and that's it. You're done for the day. Play that channel. Learn how to play that channel, that after hours and pre-market channel. I've been doing this for the last week or two, trying to show you an easy way to take a trade or to spot a support level. If you breach below that there, you know you're bearish, real bearish. But you can play that. I know a lot of people that just, that's all they trade. And they make millions. We went right up to that resistance line, that triple top. We hit it here too. We hit it here also. So we hit it, what, 6 times? 7. That'll make you a winner, chicken dinner. Anything beyond that is resistance. Anything below that is support or sell-off. There's always a pivot point inside of that channel. It's called a Darvis box. Yabba dabba do. Lesson of the day. I got thousands of ways I can trade the market, but this is just one of them. Pepsi, I guess, is going to have earnings.
Ameritrade is now part of Schwab, bringing you an elegant.
So what do you see? What do you see in there? I see 2 or 3 different ideas. I see the yin-yang, the pivot point of this whole thing right here, just with one line. Somewhere right around in there. And that's right above the 200. So that's where you, and then we got the 60, first support 63, the second the 200, and then we got a head and shoulders. Right there, so that's your third support. I'll wait for another pullback, but I mean, that's solid. We're at the 63 EMA. But after that great run, them 2 trades, I think I can just kick back. Not have to worry about nothing. Now, all these rooms are trading a SPY and the SPX. They used to just trade the pennies. SPY coming close to the VWAP. SPY closing in on the VWAP. %. Yep. Don't want to overdo it. I think I did need some nourishment. I was feeling a little bit shaky there for a second. Oh. Yep.
Use of that product, it's Ozempic and the others, to really be a material impact for these companies so far. We're keeping our eye on it, but so far it's been kind of all talk and no materialization of the threat to these companies.
Yeah, you wonder if the price on some of those drugs coming down, what type of impact that'll have, because right now it's still hard to get, expensive also. All right, great stuff. Great data as always, Landon. Appreciate it.
Thanks, guys.
All right, that's Landon Swan, co-founder of Likefolio, breaking down PepsiCo for us.
The Ozempic story is its own show.
Yeah, that definitely.
Because living in suburban Chicago, there's a fair amount of that consumption going on.
Yeah, chain restaurants everywhere. I mean, it's everywhere. But Kev, you look at this stock, it's been trading in that choppy range. They're only expecting about a $4.60 move either way in the shares. This is a $175 stock. So implied volatility levels aren't like exploding.
It's hard to find anything, so you gotta go to the other side. When there's nothing, there's not a lot to sell, you gotta play for the shorter term. I looked, obviously I have history with this. If you watch the show for years, you know that I traded this name. I was the specialist in this name. And I can tell you that it doesn't often move. But it doesn't mean it can't move.
Right.
I mean, if they come out with some good earnings, or the stock has sold off pretty significantly from its highs, so it could move on maybe some cost cutting, maybe some overall, the more price hikes. I think the price hikes are running out of gas. I think that's one of the reasons. So I looked for different ways maybe to sell. The premiums just weren't good on selling anything. So what I did, something very modest here, and I did the 1 week.
He did 1 week. I did 2. Google double top, triple top. On a 24-hour period. WFC has a new high. Continuation. daily average volume on Netflix is 3.5 million, and today we got 5.1 million. We're not even halfway there yet. Give it the 3-day rule. 3 days. SPY bounced off my VWAP in the 200 SMA. Didn't quite get there, but it did bounce up from it. It says it's finished, so probably a double top. We have new high on the IWM. First thing this morning, double bottom. Check this out. Remember I talked about the pre-market, right? So let's do this. IWM. I really want you to get this easy trade down every day. It's not a guaranteed win, but you know, pretty close. So here's your pre-market. Support level right there. Resistance right here. That pre-market high and the pre-market low, or yesterday's low after hours. It shot up and then we came back and hit that low. So I come in this morning. Today's support will be 193.08 and resistance will be 194.56. So if this thing pulls back this morning to 193 and we get a double bottom down here, we might want to go ahead and take this trade. This is how we did that other one just a little bit ago. So we come in here this morning. First thing she does is she pulls right back to that support line, almost to the penny, the body of that candle. Jump in the trade and sell it at a double top and get out of it. I come back in and found another snake. So I sold it. I got my scalp in, took it to the 200 and got out of the trade. Got out of it. I found my support pre-market. After hours. And we pulled right back to that. And then we run it right back up to the top. And got out of the trade. Do that every morning. Here's your pre-market low. And then bam. Now we got new highs, IWM. There'll be peace in the valley for me. Do 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 do. IWM. I really like that. Let me see if I can find another one. You got the lows. So you know it's going to maybe stop by there. And you had the high. You know, to get out. I know traders that just trade off that channel into open and make lots of money. And that's all they do. And they're done for the day. Cup and handle being formed on what? Magnificent. Spy? Yes. Hmm. Schwab giving some earnings plays.
On the upside thereabouts or so, Kevin. But this, we talk about that dispersion between implied volatilities where you're buying lower. And Kevin, give them a kind of a lesson, because on the trading platform, there's multiple option series in here.
This is one where I would say you really got to study what you're doing, right? Because there's different strikes. Make sure, here's a little hint. If you see anything like GEV 25, 20, stay away from those.
Yeah.
No one's opening new positions.
Those are from the spin-offs and the leftover options.
Right. So go to the new options that have no attachments or shares or minimum. Trade those, because that's where new positions are being done. Those will just go as anyway.
Yeah.
Don't avoid those.
Yeah.
Right now, let's get to the trade. There's about a nice dispersion between the two implied volatilities. So this is an opportunity to go in either direction. As you know, I'll wind up here quickly, and it's collecting theta. You've got an opportunity in either direction.
Yeah, and you get some assignment risk going into expiration over the next 4 days. But what you're looking for in this is it to go at or near maybe
there's not enough options in it.
157.5, or go lower near that 143. So you don't have to really pick a direction. You're just taking advantage of implied volatility levels. All right, that's going to do it for us today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
Implied volatility. Around 61%.
Knock, knock.
Who's there?
Broker here for the #1 hit maker.
Whoa, what we got here? Tesla at the 200. Woo, look at SPY. Said it was ready. It did its thing. We went to resistance. $498.51. $505. If it gets past 500, then we're off to the races, right? Let you put that 5 cents on there. Let me go get my coffee warmed up and I'll be right back. It says it's finished, but not been for a short period. The market, and I'll tell everybody, even traders, they have a short short attention span. All that crap that happened last week, it's been forgot about. We're off to a new week. We're off to a new start. Monday's always, to me, explains the week. We've had one of the biggest pullbacks last week that we've had in a while this year. And it needed to happen, and it happened fast. So we get a little bitty dead cat bounce out of this, maybe. But still nothing's changed. The market got it wrong. Not the market, but the people that try to say that the market is forward thinking, and I don't see it that way. I see it as in the moment. In the moment. Man, I don't feel good. Yeah. Man. I mean, today, if I just held on to them, I doubled down on them contracts. I had 8. 8 times $700. $5,600. I just, ugh. I got to get over that selling them things too soon. I mean, I got out of that first, sold them first calls for $1. I could have got 7 or 8. $11.40. Former President Trump's $175 million civil fraud bond approval approved by New York judge. I can't believe what they're doing to that man. He built New York. You know, Google had a new high. Meta had that sell off. I didn't think about it. Oh yeah. Microsoft. We've got Intel earnings coming out magnificent this week. What are you doing, Jimmy? 17th. Oh, there's $40. There's 3,000 contracts for May 17th at $40 on SPY on a Intel. Shit. Blew through it. $500's a big number. I'm not sure they want that yet, but we'll see. Coffee. One, two, three on Tesla. 1, 2, 3 on Tesla. Someone bought 1,000 shares at 142.56. another 1,000, 1,100 of them. It's about an equilibrium tape here. Oh yeah, my coffee. Where are you tonight? Had a pretty good day today, so oh gosh. The 5,000s are magnificent. I got the bottom today on SPX, and I'd be up $1,000 a piece on these contracts. Dad, I mean, I got the bottom of this sucker. Sheep. I just do it all the time. Oh, gosh, it's so sick. $12.40. I'd be up $900 on these suckers.
140 or so. So that could be a important area to clear. And then, you know,
The
we've
200
got our
day?
lines right here. That's the obvious mark that we'd want to beat eventually.
So yeah, a lot to look at here, especially again ahead of their earnings, and we are making a select.
She's something else. Amazon. So we're at the 51. We're squeezing. This is a bullish flag right here on Amazon. That's bullish. I think that's bullish. Anybody want to look at the daily time frame on Amazon and tell me if that's not bullish or not? Three black crows with a spinning top. Dang, $14.50 on these suckers. God. I scalped it again. It pulled back and I scalped it for 100, man. I could have scalped it for 7 or 8. Again. On this pullback here. I got out of it. Just. Did shit. $16.60. Whew. Lordy. Lordy, lordy, lordy. I dare, man. $1,700 on them babies. Magnificent. While you were gone, I called the bottom on the SPX. A falling wedge. A 1, 2, 3, 4, boom. From 331 all the way up to $1,700. I was looking for you to give me a grade. I felt empty today. I feel real empty now. I mean, taking 8 of them. I had 8 at 331. I'm just going to have to learn how to hold. I just got to do it. I've left so much money on the table. And I'm not talking a couple bucks. In the 20 years that I've traded. Eight times what? $1,700 is what? I'm just curious. 8 times 1,700 is $13,600. I could have made today if I just held it. And that wasn't an easy trade. I mean, I sat here and I was down. I mean, it wasn't easy. I was worried. Especially when we, but it was a falling wedge. I should have known. Oh well. So hard. I mean, you're sitting here and you just then it seemed like it was scary. And now I missed you. I missed you a lot. I really did. Didn't I? Everybody, didn't I say that? Life ain't worth it anymore with him gone. Winnie the Pooh, Winnie the Pooh. Mm-mm-mm. Mm-mm. Hey, hey, Paula. What resistance do I have on the SPY? Yeah, this is a pretty good spot right here to break. You got a triple top right now. If we break this, I think if we break this, we'll go higher. 528. I mean, you see what I'm saying? Triple top. 528. And then $528. I think 528 breaks. We stay above 5. We could probably take this long to 503.89. 504. A little under 504. If this breaks. Triple top's a lot. And there's a lot of resistance there. Resistance here, resistance there, resistance, resistance. So if that breaks, I think that's a good shot to 502.36 and 503.94. We got to break 528. Is that what you see? And you got 502.36 in there too. 502.87, 506.25, what you have? I'll be right back. Fat cats are back. Wow, that's a nice run. Apple's new high. Apple. That's SPX. 2170, 2200. Almost 2200. I got 4 contracts at 250. So that'd be almost $2,000 a contract for 4 of them. There it is. Jimmy. Gosh. These are going to run to 3,000. Do, do, do. 2420. You'll never miss me crying, will you, Magnificent? Jesus. Oh, gosh. Damn. Always clean. This Jim may help you.
Hi, my name is Kevin Foster. I'm calling from Senior Benefits on the recorded line. How are you today?
I'm getting old.
This call is about a low-cost final expense insurance program that covers 100% of your expenses. So I have my licensed officer on the other line, and he will provide you all the details about the program. Would that be okay?
No, I'm in the middle of something right now. I'm studying kangaroo rats. If you can get a hold of me a little bit later, I think you will work something out. Why'd you hang up on me? Jesus, 3260. You can skip about anything on here right now. Wow, those are way 7 notches out of the in the money. I don't think I've ever had a trade that high. Jeez. $3,200 a contract times 8. You're just looking at it, I'm going, God. 3,400. 32 profit times 8 equals 25 grand. Randy. I can't believe I left $24,000 on the table. I was in that stupid SPY too. I don't even want to look at that one. I don't, but I'm going to. 50236 coming, buddy. Yoko. What's your number next? I got 50236. 50236. No, I sold them. I got in them, I sold them, I got back in it, and I sold it for a quick couple hundred, and it ran up to 34. And I'm just going, frick. The second time I got in them was 700. Jim. 502.36 next. I have. Oh God, here they go again. Always clean, may I help you? Who?
Hi, this is Marin. The reason for the call is there are some new state-approved $0 premium Medicare benefits in your area that might be available to you.
Oh.
So do you have Medicare Part A and B?
I don't even know what that is. You have a great day, honey. I don't know. I don't feel like I want to buy a put yet. If it holds 528, I think if we stay above 500, we should wait if we drop. Because I think that's going to be your, I don't know. I think 500 would be your buffer point. Oh, Mike's going for the puts. I was getting ready to say 502.36 next. Come on, Mike. We're having a debate, YouTube. What's your next resistance on the SPY? YouTubers. Up, up, and away. Mannequin, what's your next resistance on the SPY? Swing low, sweet chariot. Yeah. Where are you getting the red boxes at? Or are you putting them in yourself? Toss predicts them. Is it John Pearson's pivot points? If based on patterns, that's my key. Oh. Man-made study, huh? See, they've got, TrendSpider has something, they call it the hot box. Heat map. What kind of time frame do you have that in? 4 hour? It kind of tells you where all the buyers are. We're way above that. That's where your support would be if it comes back down on the heat map. Three different resistance levels on the 5 minute. Twitter capital status. Jim will love this guy even more. What trade was that you were in? SPY? Let me see what this says on the SPY. Huh. $505. $494. Oh hell. $495. No, what the heck? It didn't show the heat on there? Wow, what a ripoff. They wouldn't let me transfer my heat on it. Well, that's a bunch of crap. Them bastards. $50236. Come on and do it. Do it till you're satisfied. Whatever eases your mind, do it. XOM did break a resistance. Some girl was it ABBV. She nailed that one too. Oh wow, she did nail that one. Damn. Now, Randy, we got your double top on SPX. The 50-15. Yes, he does. I might have to get out here. Oh shit. Yeah, you're right. My resistance was a little bit higher than that. Come on, baby. Yeah, I don't know. I'm going to hold on to it a little bit longer. You got one at 190, and I'll grab 4 when I get ready here. Oh. SPY. Look at that. I'm just 5 cents off my SPY. 125. I'm thinking about getting more at 125, but then I just don't know. I think I just wait. Right now I'm down $70. Hillary bounced back up. Not much, but knife to the 200. Do it. I'll be right back. I gotta get up.
You're really not making much of the election. That's not the story. I mean, the rates, the level of rates, the number of cuts or things like that are way more important than the election, in your opinion?
So I've gone back well over 100 years. Elections have almost zero bearing on the markets until you get to at least Halloween. Everyone's obsessed about the elections, but in truth, they do not mean anything for the markets. There are other things that are way more important. So I'm telling people, you can ignore. The market knows, all likelihood, either Trump or Biden are going to win. The market, that's certainty. It's not like some Joe Schmo out of left field is going to come in the election in November and win. So I would totally ignore that. I wrote a piece last week. I reinforced it today. The two biggest enemies of stocks right now, the dollar, bond yields. If the 10-year note, the 10-year yield gets much above 4.7 or so, I think you have to really rein in your horns and be at peace that we're not going to, and I'll be wrong, frankly, because I think that stocks are still going to new highs. So if the 10-year gets above 4.7 or so, it's not that far away, I'm going to have to watch a lot closer and rethink my thesis. The dollar also is been super strong lately, and it was Friday and is today. The dollar can go sideways and still give a tailwind to stocks. The dollar cannot continue marching up like this. So those two things, and frankly, the 2-year note, which is today hit 5%.
Man, just 2 pennies off my resistance on the SPY.
Lower, stocks will be fine. The 2-year note goes to 5.5. That's another sign that I'll have to rethink my thesis and I could be wrong. Those are things I would watch real closely.
Yeah, look, right. I know it crossed 5% at one point, at least last week, but each time it hits that, it's a reminder that it's bumping up against that level. And to your point, where does the 10-year go? 4.7, 5, 6, 7.
I'm in
People
puts.
threw out some crazy numbers over time. Paul, it's great to see you. Thank you so
Always
much
good
for
to
all
see
of
you.
that.
Thank you.
Paul Schatz. Thanks. Paul Schatz of Heritage Capital.
Well, I'm in a
Coming
put.
up next, we'll be joined by the CEO of Amplify ETFs, ringing.
I'm in a put. A put. At 50.15 and 70 down. If we break this resistance, I'll get out of it. on the SPY. Right now I'm just 2 cents shy of it. Sure is. So is NASDAQ. No, ain't gonna work for me. I'm gonna hold on. $5,000's made it to $39.50. Look back at that, I just ugh. Okay, I'll be right back.
Money markets, and the SOFR rate is something that kind of fits in between. Has very low duration, so it's just an overnight rate that institutions get, about 5.3%, and that yield is very competitive versus money markets and short-term rates. So it kind of fits that in between where you don't necessarily want to go to cash, but maybe you've been burned by short-term exposure in the past. So 5.3% from the secured overnight financing rate, something that institutions could only access before. 1.7 trillion goes into it a night. Now you can buy it in the form of an ETF.
And maybe a little less scary to a certain extent than investing in other things, whether it's a high-flying stock or whatever. I mean, the regular monthly income potential.
That's right.
For something like that. Explain that.
Yeah, so the overnight rate is about 5.3%. It's been that consistently for about 7 months now.
Wait,
so,
did you say 5.3 or 3.5?
5.3%.
Okay.
Yeah. So very competitive versus money markets and short term. And the big issue here is, what's your duration risk? Your duration risk is just overnight. So we think that's very compelling for investors who might have cash parked on the sidelines, or maybe are looking at high yield savings accounts that yield below 5%. Here's something that's liquid any given day. An expense ratio of 20 basis points. So not very expensive, and that yield at 5.3% is net of all fees and expenses.
So both companies have
95, don't do it.
Jointly, new products, marketing strategies. Tell me about that partnership. This is an example of how this can flourish.
That's right. So the original idea started in Korea with Samsung Asset Management. They're the first ETF provider, the largest ETF provider in that marketplace. And they launched a product called KOFR, the Korean overnight financing rate. They raised over $3 billion in it.
God.
We're partners with them, and we had talked about launching something in the U.S. and realized that SOFR was the way to do it. So here's an idea from the Korean ETF space.
One penny
migrated into the US
shy
space.
of my
Usually it's
resistance.
vice versa. But this is part of the unique partnership with Samsung Asset Management.
And congratulations being named a finalist for Best New U.S. Fixed Income ETF in 2023. And when it launched, I mean, you have, how much is in there now?
A little over 150 million, in 6 months. So a very strong start relative to many ETFs.
And so when you think about U.S. fixed income, I mean, that's a strategy for a portfolio when someone wants to have a diversified portfolio, right?
Yes.
What portion are we thinking about equities versus fixed income versus, I don't know what else you want to add in there?
Yeah, so we talk to a lot of financial advisors who right now are keeping maybe 5 to 10% in cash given market volatility.
Right.
And they're concerned about, well, what are they getting for that cash? What kind of yield? So, getting a 5% or more yield on their cash allocation is pretty timely. And, we've seen a little bit of a dip in the marketplace here. So we think some of these advisors are going to put some of that money to work now. So many people have been concerned about the run up. Now we've seen a little bit of a dip on the equity side. So having that cash or that dry powder on hand maybe makes some sense.
And Amplify, I mean, it's not just this one. I mean, you have other names under the umbrella. What are some of the names that you want to promote today that maybe have been more successful, have had a good run, really notable?
Yeah, so one of our largest and oldest funds is DIVO. It's over $3 billion in assets, and it's a blue chip ETF that owns stocks, but then the manager has the ability to write covered calls on individual stocks, which is pretty unique. Most covered call ETFs write calls on the index versus the actual underlying securities. So this is a 5-star rated fund that's done quite well and is leading in the derivative income category. On the other side of the coin, we launched the first blockchain ETF that's actively
bounced
managed
off
back
to
in
200.
2018. So we own crypto mining
Which one is
stocks,
that?
BLOK.
Okay.
Yeah, it's the largest in the space, and it's different than the Bitcoin ETFs in the sense that it really invests in blockchain, which includes Bitcoin ETFs, crypto stocks, but also blockchain technology companies. So that's been around since 2018 and is a fairly large fund as well.
Yeah, that looks good. Look at that one-year chart right there.
Yeah.
That has certainly done well also. And when you talk about jointly developing some new products with Samsung, for example, what might be something in the pipeline?
Well, we're looking at some option-based strategies to own exposure in fixed income asset classes, but then maybe put an option overlay. So you have fixed income, but additional option income. So a little bit vague in what the product will be, but we expect to file some new products with Samsung in the next month or so, which will be the first of their kind here in the U.S.
And look, that's like your Devo ETF because it's has these blue chips, but the active manager has the capability to have those covered calls on an individual stock. Versus doing it on an index or something. So it's the ETF as we know it plus. Right,
Exactly.
a little bit. It's great to see you, Christian. Thank you so much for being here. Congratulations to you and everybody on the team. Good to see you. Christian Magoon, CEO of Amplify ETFs. Still ahead, we celebrate Earth Day. Our next guest has some environmentally friendly stock picks for you. Stick around, we'll be right back.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for
I'm
trader
still in
markets.
it, but you're probably
Go
right.
deeper with
I'm still in it though, but we'll see. I'm down 90. 100. There's that Morgan Stanley last week. Man, she's got up on it today too. We're at $1 now. Now watch this thing come back. I'm thinking right here. 50-17-70. Go, baby. Come on. I got big balls. Jim's got big balls. Who's got big balls? I got big balls. Now, don't stop. Oh, I was at 180. Oh, can you imagine if I bought that dip like I wanted to? That's oh, God. I wanted to buy the dip. That'd been $500, 700, 800. Okay, I'm okay with it. Go, baby, go. Mike, can I sing a song if I win? $195. I'm up $5. What turned into an F all of a sudden turned into an A. We're at 240, baby. 260. Jingle bells, jingle bells. Jimmy's gonna sell. He sold. He's at $80. He's gonna go buy a Big Mac. 270, baby. Whoa. Jimmy prevails. Jimmy prevails. Don't ever doubt the wash. If you're ever in doubt, give Washboardjim a shout. Makes me feel like I'm 20 feet high. You know how embarrassing that was? You're a nut. It'll probably go a lot higher. Watch this. Watch it go to 500 now. After I sell it. I've got big balls. $350. 360. That sucks. There I go again. Another $100 left on the table. I have 370. 390. It's going to go to 500. Watch. Earthquake hit Taiwan. TSM dropping. Jim, why'd you take that put? Because of irrational exuberance. Man, these things are paying. I was 2 cents under the resistance on the SPY at 50236. $4.30 now. We're going to go to the 200. Well, maybe in here. Right there. 515 something. Did you see where I put that line at? See, it's right in here. That's called, let's talk about. Okay, we're at the top. And I'm going to show you 4 different support levels on this trade here on the SPX. So when you go looking for them, you'll know how to look for them. It's called stair stepping. So you definitely want to go to the previous high of that day. Let's go pull up 5-day time frame. So here's your 5 days. And then today. So today's the first day of the snake, out of the snake. So we could get a pullback and then take it off the 200 come Monday or tomorrow. That'd be a good little spot too. That'd be a head and shoulders if it pulled back to that. Let's put a line in there first just to see. What did I see? I don't like it there. I like to, I mean, it's kind of separated. Oh, I know what I got to do. Perfect. So it's going to be under the 200. There's your left shoulder, your head, and then your right shoulder. I'm going to set it above the 200 for tomorrow. Yep, SPY got a hold of 500. I got 528. Oh, I was going to do the stair stepper. I forgot. What to do on the SPY. Well, I'd say I got lucky on that trade. 3 more minutes to power hour.
Interest rates, but again, it's going to need to have more technological adoption. But I think this time, where some of the previous bull runs have been retail focused, we're seeing some of the smartest institutions, including institutions where their leaders said negative things about Bitcoin, have changed their position. So I think that we're going to probably see over $100,000 Bitcoin by the beginning of 2025.
And so much of this is about the miners, the halving. It's not necessarily about Bitcoin itself, but the miners. In fact, miners have raked in abnormal transaction fees. There was a lot of action ahead of the halving. Total miner revenue triple the pre-halving level. It just, maybe we should be watching some of those names.
Absolutely.
Do you watch those names closely?
We don't watch equities at CoinDesk Indices, but we're certainly aware of the fact that a lot of really interesting and important level 2 activity, what can be built on top of Bitcoin, took place and was exemplified by the transaction fees that accompanied the block at the halving. So that was a record amount of transaction fees. As the miners receive less and less rewards from mining Bitcoin, they have to subsidize that with transaction fees. So the more uses for Bitcoin that don't kind of disturb its natural purpose, that leads to more Bitcoin and dollars into miners' pockets and helps sustain that as a business model. Certainly, the expectation is that miners will remain competitive, that hash rates will continue to increase.
1 more
and
minute.
The future looks pretty bright. On the macro front, I agree with Ben's comments.
Pumping
that
more
interest
again.
rate and inflation sensitivity are key. Bitcoin was up like 65, 66% in the first quarter of this year, just like it was last year, but last year was for very different reasons. We were pre-regulatory approval, we were coming down in interest rates, we were coming down in inflation expectations. Now it's the opposite. We have ETFs approved, we have $53 billion in them in the United States, but now it's back to a macro picture. So Bitcoin watchers should pay attention to macro, pay attention to the Fed, especially over the summer. Our trend indicator points neutral, which for now indicates that there's really the upward trend in Bitcoin prices has kind of paused for a minute, but just hang on.
Yeah, understood. And so you have all these ETFs, and now the question is whether or not an Ethereum ETF or ETFs will be approved. I mean, in January when these became they were so popular. Ben, I'll leave it to you. I mean, Bitfarms, Marathon Digital, so many of these other names that we have, Iris Energy, Bit Digital, Clean Spark, just to name some of these miners. But the final thoughts here, should everybody own some Bitcoin or Bitcoin miners or what?
ETFs.
Well, that's a personal decision for everyone. I think if it's between Bitcoin and Bitcoin miners, Bitcoin is the easier thing to buy and probably will be, move with the market more than specialized things like miners. There's always some risk there. But I think another thing we have to look at as well is how is the behavior of consumers who are holding crypto through an ETF different than maybe some of those earlier consumers
the Bitcoin ETFs.
Maybe more traditional investors who are taking profits more than early enthusiasts of Bitcoin. That could put downward pressure on the price as well in the future.
Yeah, thank you both so much. Ben Weiss, Andy Barrett.
IBIT's always leading the gate.
Bitcoin is the talk. It's been exciting and now much more ahead. Thanks for joining us here on the watch list. I'm Nicole Petalides. Thanks for being with me.
We're at the 200.
Our free Schwab Network app.
So we're at a resistance.
On the Apple App Store. Tune in 24/7, schwabnetwork.com. Thanks for being with me. Market on Close is next.
I love you. Doom, doom. Boom. Yep. IBIT's at the 200 on the hour. BITO's at the 200 on the hour. GBTC's at the 200 on the 1 hour. FBTC's at the 200 on the 1 hour. They all at the 200 on the 1 hour. All of them. Look, every one of them suckers are on there. All but that one. WT, and I added that one. That's at the 200. Every one of them's at the 200. Man, this sounds like an interesting game. 200. 200. 200. Every one of them suckers. All but one. We're at the 200 SMA on the hour time frame. All of them. Huh. You picked the right time for the dip. Too many wires. Oh, I guess. Don't switch. Hello. Am I here? Yeah. So last week was really a tough week for me trying to listen to these fat cats. I knew the market was going down. They were trying to pump it all week. I didn't want to hear it.
To make a stir until we lost the semiconductor and the AI trade. That's what happened last week. Nvidia's still trading below 850. That was the line in the sand. It held multiple times 850, 855.
SMCI.
Still below it. In fact, we're still below $800 after today's bounce. So it's not the biggest, strongest comeback day here, but it definitely is obviously in the right direction to at least kind of tourniquet some of the bleeding from last week. We've got a solid bounce in Bitcoin that's been there since overnight. Again, 3% for Bitcoin, 4.5% for Nvidia. Solid moves, not exactly recovering lost ground in a meaningful way. And there are a few that haven't gotten included in today's dip buying action. Look at Super Micro as an example. I was actually thinking
called out in the video, in my video.
See rally even more today and lead the way, but it's actually just barely positive, and it spent much of the session red. SMCI, of course, after 300% rally on the year, had a lot to live up to, as do many of these companies heading into earnings, but it's going to be about a week until we start getting more of the hardware names to report. SMCI should be at the top of your list, though, for April 30th, still a week away. So will this be a 5-day period without Fed speak? That's important this week. No Fed speak. Will that allow the tech trade to continue its strength? With earnings still generally about a week away for the big key names here. Yes, we've got some giants this week, and companies like Meta and Microsoft that have held in quite well are going to be very integral to where the market goes. But Nvidia, SMCI, and the whole AI trade that really was core at its start in the hardware still is not going to give us a lot of big reports this week. So it's basically a test of momentum. It really is just momentum that we have to discover whether or not it is momentous still or not. That is really key in all of this because, yes, the macro situation has changed. Bonds got hammered, and bond bears still have some energy. We can see the TLT is down on the day still, but the question is momentum. What is going to drive it? What we saw over the last 10 days was the early momentum from the core tech trade soften and basically turn into a gold trade. That was about it. And we're seeing gold come off today, as that was the big momentum winner last week. Gold kind of usurped the momentum from Bitcoin, from stocks. Bitcoin peaked out the moment that the stock market peaked out. And so to see gold drop today does suggest we've got some risk on appetite, that the old momentum trade of risk on might be able to ingrain itself again this week. It's the right start for bulls. Of course, they need to recover the trust and the confidence in this market after a few of our big momentum trades rolled over. I got Jenny Horn and Kevin Hanks here with me in the studio. All right, so today, this is definitely picking up in the second half. This morning, as we talked about, Kev, gold being down, Bitcoin being up, like a 5% spread between those things. One is traded as pure risk. The other's actually been the store of value. That, to me, suggested today was going to be a good day. So I think this is a solid start.
There's a relief feeling about today.
Yeah,
and
exactly.
an anticipation that, like last quarter, large cap tech's going to bail us out, Oliver, right? Isn't that what this field kind of has? Look at the winners today. That other than Tesla, which broke more bad news about pricing, all the Magnificent Seven are stronger or higher or firmer, and all making recoveries, even though Nvidia's not even at 800, it's still having a great day, right? It's still stronger. So there is a relief aspect to what's going on today, but this is going to get more interesting as the week goes on, as you know.
Yeah.
I think tomorrow morning is going to be interesting with GM and UPS and PepsiCo and GE and all the new GEs. So I think there's going to be fun there, but
a great momentum trade in itself as well. General Motors, Ford was one of the top winners all day today. So, there's definitely some strength there.
The 50-15s are now 215.
Until Nvidia in the big ones. And how many times
I could have really loaded on that baby.
Nvidia is your shorthand proxy.
230.
Figuring out where the market's going to go. That system's been working pretty well.
It has been working pretty well, except for last week when we started to see this panic. And I feel like you have to be very mindful that some healthy selling, a healthy correction doesn't mean that the AI trade is like falling out of favor, that there's not a demand for it.
Totally.
I feel like we were so quick to jump on like, oh, hey, maybe AI isn't as useful to our lives as we thought it might be. That is absolutely not indicative of one bad week for NVIDIA.
I'm glad you bring that up because I did see some stuff of like some perma bears online that over the
Ridiculous.
weekend. Yeah, that were like, well, this confirms that the AI's been a hype. I'm like, all right, dude, like it's been a week. The Supermicro still 300%, Nvidia, tons. How do we kind of assess, Kev, when the hype really turns to brass tacks? Is that this quarter? Do you think it's going to be, a reckoning?
There will be a day when the valuations in AI across the space, when winners and losers start to form and valuations come under scrutiny, right? When growth starts to decelerate. Do I think it's now? No, I don't. Especially not in NVIDIA. I think they're still growing. I still think they've got capacity issues. I think AMD was approaching competition level, and then NVIDIA just blew them out of the water with the latest chip. And now they're in the far distance again. So, listen, streaming, I mean, my history goes back all the way to .com trading these things. So these things, they all halt. They all
Sure.
stop eventually.
Sure.
And the valuations come more in line. And
that's what I think about SMCI because it kind of looks like nobody's showing up for it today. And that to me is a little bit concerning if you're bullish in this camp.
Right.
Shouldn't that one be like ripping even
There's
more?
gonna be winners and losers within AI. Just because you're in AI doesn't mean you're doing it right, doesn't mean you have the right product, doesn't mean you'll be successful.
Yeah.
NVIDIA, you can make the case they're selling the picks and shovels.
Yeah.
Right? So that's a
NVIDIA. Oh, Rudka, RKDA, one of watch off the split, thin float, 52-week low, 45% low volume. Yeah, I used to trade Rudka. Very low volume though. Wainwright also puts a buy on it for a $10 target price. U.S. drug-induced death growth. Oregon, huh? Washington, California. Where's Missouri right in here? Down at the bottom? That's hard to believe. Anybody watch that fight? That was pretty good. I really thought Ryan played that perfectly. SM earnings next week on SMCI. Well, is that big run up going to be? It had too big of a run up for one. It's funny how everybody says we had too big of a run up after it's already ran down. They're saying it again this morning. And I called it out way before everybody else did. I said, this sucker's at 12.29. 6 months, it's up from 600%. You serious? From 226, all of a sudden it's all the way up to 12 something. I wanted Mister to pull back one more arm and it didn't do it. Should have seen that higher low right there. That might have changed my mind. Oh, gap. Damn it. There it is right there. Said gap. Watch where I put that trend line on. Watch where we pulled back to. If I saw that, I'd have took that trade. 1165.92. Let's see if we're right to the penny. Look at that. Right to the penny. That'd have been a good trade today. I'd have took that if I'd noticed that gap. I would have took that one. Yeah, I'll be right back. 2:23. So we're gonna have to get a couple people on mic with me on here. We need to have somebody to get on here with me. I'm not gonna sit here all day and not be entertained. It's too damn boring for me. Mr. hit the 9 on the daily. A pretty good little spot how it bounced off the 63 EMA. Well. YouTube, anybody out there stuck in a trade you want me to look at, or a stock? Any idea? You looking for a resistance or one you want to get in? I'll help you chart it up. The IWM's at the 200. What do you think about GUR? You hear about GUR. GUR. Gorilla Technology Group has received a notice of allowance for its U.S. patent. Three. AI-based on security, convenience, and network defense. That might be a good one. If they want to switch around and move around AI some. It's got to break the 9, which needs to stay above 580. I say if it breaks 620, you'll go higher. It has to break 620. That's your resistance to break. 620. That's what I'm thinking. It's a tough one. It looks like it can pop. I mean, look at it. Had like a 3-month resistance at under 10. You still in GL? That's nice, Percy. That's that one took that big knife. You got to break the 9, so the 9's the resistance on that. The 9 EMA. Right around 71.17, 71 bucks. Looks like we almost hit it today. Look at that. I said almost, well, that's a buck. That's 70. They're too expensive. I think you could even go down a wider spread on Mister if you wanted to, but they're very expensive. Jimmy called the SPX at the 200. He nailed it. I don't even want to look at the calls. What are they at? I called it 200 SMA. Ugh. Shit. Ugh. I don't even want to look at these. Oh, they're not that bad. 380. Well, they are that bad. 420, 490. $5. $5 on the puts. Unbelievable. I know what is irrational. Jimmy called it right here. Double top. It ran up, I added, sold, and now look at it. 860. Magnificent. You're killing me. You're killing me, Magnificent. Why did you do that? I got these at 190. Oh, I got them at 190. It's just horrible. All I had to do is wait for what? Oh. Dadgummit. I could have had a $60,000 day today. Well, not that much. 3,400 and then another 3,000 and another. I just had one of those. Another 500. Oh well.
Bearish type trade. This stock can still go higher. They can still profit on this. I'm not sure if it's a speculative trade or if it's somebody maybe hedging a long stock position at this point, but to sell 20,000 call verticals. And I like the fact that this trader did it risk defying going into earnings. We talk about that a lot on my show is, you don't know what could happen. We could see a 2 or 3 standard deviation move to the upside after this stock's fallen so sharply, but I think still measured at this point by this trader. He thinks maybe it goes up a little bit, but doesn't break out by any means.
Basically betting against a big time rally.
Right.
Essentially. Not betting that it's going to slip, but just betting it's not going to pop. We have IBM this week on Wednesday. The stock's been trying to hold up basically within its trading range since the last earnings, which were really good. IBM's been pretty stable. What'd you see here?
Yeah.
These were my 3 supports on Tesla.
Just under $200 a share. So this thing's had a good resurgence, right? We haven't seen these levels since 2013 on the shares. And I think it's that combination between what they're doing on the AI side and then the consultant side of their business. So they're getting a lot of partnerships built in there because they already have the consultant side of the business. That's not the higher margin part of the business. The AI portion is. So that connectivity between the two within the company has made this a darling in that AI play, and the stock reflected that. It's still up about 11% so far this year, so it's pulled back quite a bit from those highs. Option market's pricing in about a plus or minus $10 move in the shares, about 5.5% on these, and it trades a lot cheaper than a lot of these AI names that are getting these lofty valuations, about 22 times earnings and 12 times free cash flow on this one. So it's not overly priced, and I think that's why you've seen the analysts jump on board over the last 6 months or so on this name. Now, going into earnings later this week, I mentioned that the option market is pricing at about plus or minus $10 move in the shares, and we saw some call buyers out in the May monthly cycle. So 25 days to expiration. Trader bought 10,000 of the 200 strike calls for $1.15 debit on those. So the break even just over $201 over the next 3.5 weeks. That's about 10% above the current share price in there, and call volume about 2.5 times normal daily average volume that we've seen over the last week of trading. So a lot of call options getting bought up in here into earnings. A lot of the analysts that I've seen come out over the last several weeks have been upping their price target into this report, but expectations pretty high. And if you've known IBM like I have and traded it over the last 20 years, it sometimes disappoints, but this trader thinks we're going to see some more highs in here. That break even 201, that'd be a fresh 10, 11-year high.
Pretty darn bullish.
Yeah.
All right, last one is United. Shares have been ripping, like a delayed earnings thing going on here. Pretty amazing stuff.
30% in the last less than a week.
And no love for Boeing during that time, but at least that stock has stopped selling off to some extent the past week. So.
Well, you know what? After this earnings report came out, I go, okay, the CEO, he was pretty positive about their outlook moving forward. Capital spend getting pulled back, right? They're not getting covered at this point. But to see a 30% rally, and this thing, the bar was low going into the earnings report. Let's say that. But this is pretty spectacular parabolic move to the upside. And somebody thinks it's going to continue to move higher. And they were out there in the June monthly cycle, so 60 days to expiration. A trader bought 10,000 of the June 60 strike calls for an average debit of just over 90 cents. So that break even of just under $61 over the next 2 months. It's about 12% above the current share price in there. 8-month highs the stock hit today, and as I mentioned, up 30% from those earnings last week that we saw. But somebody betting that, hey, over the next 2 months, we're going to continue to see this stock move higher. You've got oil prices helping over the last several sessions. Also, that might have given a lift, more of a lift post earnings to UAL also.
All right. Now, I guess I didn't realize that it had bounced back so hard. I knew that it rallied post earnings, but the sustained trade here throughout the middle of the sell-off of the market is really quite a sight to behold, and nothing else really in the sector doing that. I mean, the Jets ETF is back near highs, but no breakout or anything like that.
But remember that when the stocks were rallying to all-time highs, the airlines were struggling.
Yeah.
So this is like that opposite trade that we've got now, where stocks have pulled back a little bit, but the airlines are rocking to the upside post-earnings.
Okay. All right. Big trade in UAL, looking for more. Okay. Thanks, Tom. Coming up, gold and oil, labeled as the geopolitics trade, and for those that were trying to use geopolitics to explain the last week, coming up a little short with oil down in the low 80s again, and now today, gold gives up some of its gains and a pretty hefty sell-off. We'll be right back.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Li Auto shares are falling to kick off this week after it announced cutting prices on 4 of its 5 models. It is cutting prices by approximately 5% on its L7, L8, and L9 vehicles, as well as its Li Mega models. It will also be offering cash refunds to those who purchased models earlier this year. Last week, Li launched the L6 Extended Range EV and said the vehicle sold more than 10,000 units within 72 hours of launching. However, this was not enough to enthuse investors. Shares are down over 18% so far in the month of April, alongside the broader EV weakness. Shares of Tesla, for example, have also fallen about 20% now month to date.
I think the drop's already priced in the
Schwab
report.
Network app or visit Schwab
Should get a
Network.com.
bounce.
Bit of a rough day for the gold bugs, but of course they've been on top. Gold shedding 3% roughly this afternoon, heading into the bell. Chris Robinson joins me from TJM Institutional to talk the trade-off between gold and the rest of the market. A few other things.
SPX at $3, the put.
Here, is that just expected as equities bounce?
Well, it's $100 off the high too. We gotta remember we were just there, about 5 trading sessions ago.
This is, I don't want everybody to get excited because we had a good day today. We had a real bad week last week. This is just natural. Jimmy said we're going to see a small dead cat bounce on Monday because we were way overextended. Now they can move this and make it bigger. I mean, like I said, every week, every Monday's a new era. I forgot about what happened last week. I didn't even hear Powell's name today. That's because I didn't have him on, probably. But it was way, I mean, nothing wrong with what happened last week. It was a good flush. And we're still way overbought. But that don't mean we can't trade. They trade and scalp. Not sure about investing yet. Ugh. That's a good one.
With NBC News to carry a lot of its political focused news, and they want to be the type of app that people can go to it and participate in the political process without leaving the app at all. So it'll include a place to register to vote, to sign up for election reminders, and then to even make a plan for election day, all without even leaving Snapchat. And then it becomes a gold mine for Snapchat because advertisers will know that they've already got a captive audience. Now, it'll also include on-the-ground coverage of key events like conventions, rallies, speeches, and also with this partnership with NBC News, they have the Stay Tuned program that the company will continue to do. And actually, that's the start of the Stay Tuned program. They've done another in the past. But this particular program, it talks with Gen Z voters about issues that are more specific to them. And this is also a continuation of something that the company did in 2016. Back then, Snapchat launched Good Luck America news show. And
yeah, I remember that.
Yeah, you remember that.
Yeah,
now that's going to be continuing. I thought it was too. That'll be continuing as well. And also, they want to make sure they know that political advertisers have very specific tools that they can use as well on the website. So it'll launch a specific option for political advertisers to be state specific as well. So they are really, really coming out of the gate with some incredible, to some people, advancements to what it already has, and a lot more than what we see Meta doing right now, because they actually pulled back on political advertising because they were trying to fight misinformation in the last election cycle.
Yeah, I don't think anybody's been too concerned that Snap is swaying elections, but maybe it would be good for their stock if they tried.
Yeah, it might be. And, you know, they're trying to get Gen Z voters. You know what? A brief statistic, they said that with about 80 million, more than 80 million voting age Americans that use Snap every day, maybe about half of the U.S. voters that are less than 30 years old plan to vote this year, and so they're going to try to reach the amount of people that are on Snap who are voting this year.
All right, interesting. Okay, not doing anything for the stock right now, but I would think it would be a pretty big deal. I mean, this is a huge event for them to try and capitalize on, get something going.
Might be a show me story though.
For sure, for Snap always is. So when you've been in the doghouse for so long. Thanks, Renita.
Of course.
All right, coming up. Got a big picture discussion with the Schwab team. Don't miss it. We'll be taken into the bell with the macro duo coming up next. Stocks are solid. Good day to start the week.
I was born on the south side of Chicago.
You sure were.
It's a long road, but now I'm working for Schwab. I love to help.
I don't know how you got that job.
Understand the world through their
You're supposed to have been mine.
and invest accordingly. You can call us Christmas Eve at 4 o'clock.
You got that same grin you had when you took that job. You stole it from me. Why did you flap my tires in my car so you could get there first? Do-do-do-do.
We got some time into the bell to talk big picture with our Schwab team. This afternoon's duo is Kevin Gordon and Colin Martin. Kevin's a senior investment strategist. Colin's a director and fixed income strategist at Schwab Center for Financial Research. Afternoon, guys. Kevin Gordon, get us started on the phone. Stocks bouncing back. How do we go into earnings now after we got a pretty big hit in the last 10 days?
Yeah, well, so far today is kind of really about a reversion for the momentum trade. That seems to be what's leading some of the areas that got, crushed the most last week. But I will say, even though it was a rough couple of days and maybe past week for some of the indexes, once you actually move down the cap spectrum and really just get away from some of the mega caps and the sectors they're in, upside volume last week was actually pretty good. So there was a little bit of an improvement, maybe a lot of it depending on what sector you were looking at, but there was improvement under the surface towards the end of last week. So I think that, whether it's a sign that this whole correction or whatever you want to call it has sort of phased out or been complete, I think that remains to be seen. I want to see a little bit more of a washout in sentiment, but I think looking at some of those trends, especially as we go into earnings season with expectations relatively elevated for some of those mega caps, I think that's going to be an important thing to watch.
Hey, Kevin, one small detail I'm hoping you can just give us some specifics on is when you're looking at breadth, how do you factor in what we went through with NVIDIA and concentration? Because I would think by some definition, when NVIDIA leads as big of a sell-off in semis as it does, that kind of negative force creates breadth in sort of a negative way. But what you're saying is breadth in a positive way, the actual number of companies going up, right?
Yeah, if you're purely just looking at performance and using a market cap weighted index, of course, yeah, something like an NVIDIA or like an Apple or a Microsoft or whatever mega cap you want to use, that's going to pull down the sector and the index. But yeah, if you just look at purely the number of companies either that are above a certain, moving average, whether it's 50-day or 200-day, or those that are just, rising on any given day. Friday was an example where even though you had a lot of weakness at the headline index level, pulled down by those big names, the majority of stocks were actually rallying. So that would be an example where it's a positive breadth setup under the surface, just not yet filtering up because of the dominance of some, a couple of stocks.
Okay, if generally in the past, one more on this subject is, if generally in the past broadening out is good, does it still work after as highly concentrated of a market as we got, Kevin? Will the breadth indicators be as powerful when things got so skewed to the top?
Well, I think it depends on where you're at in some.
Ding, 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 ding. Bingo. All right. Well, today I tried to do it without the TV. CNBC would have probably upset me all day again. I'm just trying to, I don't know. I know what's right and what's wrong. I've been here too long. And I don't like pumpers. And they were pumping last week. And lying to you at the same time. So I got to figure out, I was thinking all night this morning about how I'm going to come in here and do like some kind of game show or something. Divide things up in different times of the day. Because I got to be entertained or I'm going to be bored to death. And I can't be myself, crank up the jams or play a song. And I just sit here and I get burned out and bummed out. And I lose my concentration. I got a lot of stuff going on. I can come in and come out and boom, 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 boom all day long. Here I got to sit and wait. So I got to figure out some kind of game. Yabba dabba do. So every week's a new week. And today I don't think we heard anything, or I don't know. I didn't hear interest rates all day, that's for sure. I get sick and tired of hearing that. It doesn't mean a thing to a trader. And one guy last week said, yeah, the margins might be up there, but damn, how high are you going to keep going? It's the charts that do all the talking. So I found them more reliable than fundamentals any day, unless you're probably a long-term trader. I'm going to go ahead and eat my chicken soup and relax. And y'all have a great day. Thanks a lot, everybody.